And now, without any further delay, let's begin today's event, sponsored by LexisNexis and hosted by Insurance Networking News. I'd like to introduce your moderator for today, and that is Elliot Cass. Elliot, the floor is now yours.
Thanks. Hi, everyone, and welcome to today's webcast on strategic visualization and evolving how you view commercial property underwriting. Once again, this event is brought to you by Insurance Networking News and sponsored by LexisNexis. I'm Elliot Cass, and I'll be your moderator. Location information is a key part of assessing commercial risk, yet most of the time underwriters are forced to learn what they can by manually gathering and calibrating key inputs such as policy enforced data and industry-wide peril data. Carriers can overcome this limitation by leveraging a single point of access for all key information within their underwriting workflow. This will provide the data and visualization capabilities they need to make smarter decisions. During this webinar, we'll explain how improved location data and visualization capabilities can provide underwriters with a clearer picture of a property's location and a better understanding of a property's risks. To help us understand how this can all be accomplished, we're fortunate to have a pair of experts with us today. David Day is an insurance solutions consultant for LexisNexis Risk Solutions business. David is focused on assisting homeowners and commercial insurance companies with property-related challenges. Previously, he has advised insurers on how to manage their exposure to natural hazards, serving at companies such as Verisk Analytics and Risk Management Solutions. David earned his bachelor's degree in business from the University of Iowa and his master's in business administration from Bradley University. He also has an associate in risk management designation. Welcome, David. Thanks for being here today. Also with us is Ernie Fira, Vice President and General Manager of Commercial Insurance for LexisNexis Risk Solutions business. Ernie is responsible for developing a suite of products and services for the commercial insurance market. In his previous role as Vice President of Product Management and Analytics, he was responsible for product management and analytics across the insurance product continuum. Ernie also served as Vice President and General Manager for Claims, where he played a central role in building a claims-focused business to complement LexisNexis's data and underwriting business. Prior to joining LexisNexis, he was responsible for operations at ISO's claims data and analytics business. Ernie earned a master's in computer science and an MBA from Iona College. He also has a CPCU designation. So glad you could be with us here today, Ernie.
Thank you, Elliot. Glad to be here.
I'd like to remind everyone that Ernie and David will respond directly to your questions later on in the webcast. If you have a question, please type it into the question field on your console and then submit it by clicking on the Enter button. We really encourage everyone to do this, and we'll answer as many of your questions as time permits. And now, before we begin the formal presentation, we'd like to take a quick poll of our audience to get a better sense of how you all make use of visualization. Everyone should see the poll on the right-hand portion of their screen, and we'd like you to respond by choosing as many of the choices that reflect your experience and that of your organizations. So here's the question. At what point in the insurance continuum do you utilize geospatial technology? And there are 5 choices. The first is marketing, the second is underwriting, the third is renewal, the fourth is compliance and reinsurance, and the fifth is claims. And again, you can choose any of these 5 that apply to your organization. At what point in the insurance continuum do you utilize geospatial technology? Marketing, underwriting, renewal, compliance and reinsurance, and or claims. And with that, I think we're going to close out the poll. And now we need to give our system a few moments to catch up with everyone, and I should have the results to put in front of everybody just momentarily. As always, it'll be very interesting to see how our audience breaks down in terms of their use of geospatial technology. So again, I apologize for the delay, but it takes a few moments for our system to catch up, and here are the results now. So at what point in the insurance continuum do you utilize geospatial technology? 81% of you are using it for underwriting. That's a huge number. The next highest group are 40% of you are using it for marketing purposes, and then the other choices lag behind. The highest of the three is 33% of you, so that is a third, are using it for compliance and reinsurance. And so with those polling results in hand, I'm going to turn things over to Ernie Fira. And Ernie, I'm very curious to know what you think of the polling results.
Yes, Elliot, I think that's kind of what we expected, in that at point of underwriting, that's where geospatial information is most important. And I guess we've found that because it does take a long time to assess this information, that you just don't have the time at point of renewal. But at the other points of the insurance continuum, clearly geospatial information can be utilized. And today we'd like to throw out some ideas about where geospatial information, we think, and some other data sources could be used throughout the continuum more effectively through automation and what we use the term to call strategic visualization. Well, let's take a look at different types of existing location intelligence used in a geospatial world, so then we can move to talk a little bit more about strategic visualization. But when we look at location intelligence today, one of the areas that we really want to look at is the whole area of location risk factors. What are the data factors specific to a location from the perspective of business failure or crime in that particular area? What is the foreclosure rate in that particular geo-block or area? Vacancy, bankruptcy, and business change rates. And then I really want to look at those perspectives kind of in a composite view and come up with a risk proximity score that takes into account all these factors. And this is one aspect of location risk intelligence today. A second area, really, is we want to look at natural hazard data. Natural hazard layers is information on wind, hail, fire, earthquake, flood, and tornado specific to that area. This information is usually derived and collected from the government data, and we create an overlay of that information to see the intensity of that specific peril in that specific area on the map. The next area where location intelligence is very important is just the basic firmographic information, the basic information on that business. When was this business established? What are their annual sales? Who owns the property? What's the type of business that they're involved in, their SIC code and NIC codes, their numbers of operating locations, and information about real or personal property is all very important from a firmographic perspective. The next area for location intelligence is loss history information. Here, we're talking about actual cause of loss claims that have occurred in that particular geoblock. And we use industry-wide information, aggregated loss data, to come up with that information. When we look at loss data, it's broken into different causes of loss or different types of perils. And here are the 11 perils that are specific to claims. And when we look at claims, we want to look in the perspective of loss frequency, how many times are these claims occurring, these types of claims, and severity. When there is a claim, what is the intensity or cost in adjudicating that specific loss? Next, it's important from a location intelligence perspective for us to look at the policy data, to look at the accumulations and the existing policies I have in that specific area. So let's take an example here. If I'm with ABC Insurance Company, I maintain a repository of my commercial policy loss data. And I want to see the total insurance to value based in a specific geographic area through a user-based interface. So Jane, my underwriter at ABC Insurance Company, if I'm going to look a search at a particular property, I want to see my existing accumulations of policies in that area. And through location intelligence, Jane can see the impact of adding a new risk to that existing carrier's portfolio and see that visually. That's another area of location intelligence. We'd like to ask you a question about the types of data that you're utilizing today. So, Elliot?
So we're now going to ask our audience the second polling question. And you should all see the question once again on the right-hand portion of your screen. What location-related data does your firm utilize when underwriting property risk? Again, please choose any of the answers that correspond to your and your organization's experience. The 5 possibilities are A, natural perils, B, lost data, C, policy information, D, neighborhood data, and E, none of the above. So again, what location-related data does your firm utilize when underwriting property risk? A, natural perils, B, lost data, C, policy information, D, neighborhood data, and E, none of the above. And with that, we'll close out the poll. And again, like before, we'll wait a few moments, and hopefully the responses will be popping up in your screen momentarily. We just need to wait for our system to catch up with the last person that responded to the question, and hence the lag. Hopefully that will be momentary. Here we are. The largest percentage of you at 87% are using location-related data for policy information, and another very large percentage of you, 74%, are using it for loss data, and a third group, 71%, so almost as large, are using it for natural perils. Neighborhood data came in at 50%, and it's worth mentioning that none of the above was only 5% of this group. So you're all making significant use of loss-related data in the underwriting process. And with that, I'm going to turn it back to Ernie. And again, Ernie, if you have any comments on the polling results, I'm sure we would all like to hear them.
Yeah, and I think, Elliot, once again, I think this is kind of how we saw things also, in that carriers are needing to look at their concentrations from a policy perspective, and there is loss history available, information available, and neighborhood data is somewhat of a new source, and I think we've heard from carriers that if there's a way that that data can be distilled and used, that it can be important and used more in the future. So that's one of the areas where you know, we think that there's an opportunity to use additional data in that area. So we've talked about location intelligence, and as you can tell, there's a large amount of information here. And we live in a world in commercial underwriting today where there's an information overload. And we've burdened our underwriters with more information than they can manage. So how can we help address that problem? Well, that's where we come to the concept of strategic visualization through what we're calling location intelligence indices. We talked about the different perils and the type of information that we want to look at a particular location. How can we take parameters like crime, foreclosure, wind, hail, vacancy, fire, flood, and take that broad array of information specific to an address and put it into a format that can be managed by the computer in an automated fashion so that we only identify those risks or situations where we have perils history that is beyond our tolerance. The kinds of risks that are important just to look at because it's more than we want to tolerate from an underwriting perspective. automation of this information is what leads to strategic visualization. We have to take multiple addresses that are coming into our infrastructure, process those locations, apply location-specific indices against those addresses, and then only identify and call out those particular addresses that warrant further visualization and attention. So in this example here, we have multiple addresses coming in. We take the peril-specific information like business change rate or business failure rate, bankruptcy, vacancy, crime, and we turn those into a set of indices so that when we look at 950 4th Avenue, we can see that we have a very high intensity of business change rate, and this is a particular risk that warrants further attention and strategic visualization. So here's an example of that 950 4th Avenue, Dallas, Texas, where we've taken the peril-specific and location risk-specific information, turned it into a set of indices, and I clearly have a situation where I want to look further at this particular address because I have some pretty high intensity scores when it comes to aspects like wind, hail, and concentrations from a policy perspective. And now, through strategic visualization, we're really only viewing those risks that warrant our attention. So in an automated fashion, I'm helping that commercial underwriter distill a large amount of information through an automated process and only look at those risks that are important for me to further underwrite and create greater scrutiny from an underwriting perspective. So how do we implement these types of processes into our workflow? Well, we've taken all of our perils and we've converted them into these indices, a number from 1 to 5 or 1 to 10 that measures the intensity of that particular peril. We implement these indices and our concentration thresholds into our underwriting workflow. When we talk about concentration thresholds, we're taking, well, what is my existing concentration of policies or TIV in that particular area? And let me translate that into an indice from 1 to 10, with 9 being, I have a high intensity of policies in this area, or 1 being, I really don't have many, and I can probably take more risk in that particular geographic area. So now I want to implement these indices and concentration thresholds into my underwriting workflow. So here's an example where I've taken the risk-specific information and translated into a set of indices, which I can then view and decide whether further underwriting attention is required. I identify the high risks, and I also understand my total insurance to value and concentration thresholds. So if I'm looking at a situation where my appetite for premium coverage in that area is overly concentrated, I can decide to withhold or further underwrite that particular location. Now when I set those thresholds by industry and I've set those indices, I may want to look and determine what thresholds are by industry and exposure. Let me try to illustrate that a little bit further. Let's say I have a lot of business today where I'm writing car dealerships. Well, if I have a lot of businesses where I write car dealerships, hail can be a very detrimental loss to me. So if I have any new risks coming in where the hail exposure is greater than 3 on a rating from 1 to 5, I may want to look at that particular new dealership that I'm about to underwrite. In a similar fashion, if I'm using a 1 to 5 indice on theft, if I'm underwriting jewelry stores, perhaps a low threshold of 2 is not acceptable to me because any kind of theft in an area where I'm underwriting jewelry stores could be a problem. And then when it comes to flood, if I'm writing small businesses in an area, I may want to look at any indice greater than 4 from a flood perspective as I underwrite risks from a small business perspective, especially if I have concentrations in that area. So now I've got my threshold set, I've implemented my indices, and now it's into production. I visualize those high risks and pass through the low ones. And now I have a business process that facilitates that. I'm going to accept those and pass through and not visualize risks that are within my tolerance levels. I review a book of business, and now I'm focusing on only those highest scoring risks that require my further attention. What we'd like to run through with you at this point is a particular example how strategic visualization would apply in a small business situation. And we're going to do a use case with a company called Classic Cleaners. Classic Cleaners is a company that has actually 4 locations dispersed in the Dallas area. So that's the case study we're talking about. Now, when we look at the 4 locations for Classic Cleaners, I think from a strategic visualization and an underwriting perspective, we really want to know more about the location-specific areas. What surrounds Classic Cleaners? What are the risk profiles in that area? We always have basic firmographic information, information like number of years in business and number of employees, sprinkler information, distance to fire station. That's the traditional data used in the underwriting process. But how do I get automated appending of data and scores and indices that help me better understand the 4 locations specific to Classic Cleaners? So through my processing engine, in comes the 4 addresses for the 4 Classic Cleaner locations. My scoring engine then goes through and provides indices, peril-specific indices on all 4 of those locations. And I find that one of the 4 warrants a referral. It has a high business change rate. It has a crime indice, which is beyond my threshold. It's showing me a wind of 8 and 9 and hail of 9. Okay, clearly this is one of the risks specific to that small business that warrants further attention on my part. It becomes highlighted. I start paying closer attention to these indices which are important to me. I then can drill down to the specific visualization and see, okay, on the specific location, they are in an area that has a large amount of business change. Secondarily, the area or geo-block for that business is a 7 from a crime perspective. I can drill down and see my crime issues there. The area also of the pinpoint of this location is clearly high from a loss history perspective on wind. There's been a large number of historic claims, property claims, from a wind perspective tied to businesses in that area. And then last but not least, my loss history repository is telling me that I have a high propensity or frequency of hail events specific to that particular location. Last but not least, I want to look at my existing policies. So it's important to see my concentration, and my concentration in the form of certain radii coming out. So if I'm looking at 100 meter, 250 meter, 150 meter exposure radius, how many existing policies do I have there, and do I have an appetite to add an additional risk at this point? So the final assessment is a presentation of all these parameters, the visualization. Then I can go back and decide whether I want to underwrite, reprice, or pass on this specific risk. And the tool, strategic visualization, is providing you in the form of indices indications across all of these parameters of risk. So what does making it real or turning strategic visualization into a reality really mean? Well, we see certain benefits for the industry coming out of a solution like this. First, we clearly improve our underwriting and risk assessment, and we clearly better price because we're looking at a lot greater granularity specific to the risk and specific to the particular location. I'm clearly bolstering my exposure management and understanding what's my existing risk in this area, and am I ready to take on existing exposure and gain very valuable new insights into risk assessment. What's the process? Well, we talked about it earlier. You want to take and implement these indices and concentration thresholds into your existing underwriting process. You want to look at whether there's an importance of thresholds by different industries, SIC codes, and types of exposures. Then you want to go into a production mode where you're visualizing those high risks and passing through and automatically underwriting those that are lower. And on an ongoing basis, you're reviewing your book of business and focusing your attention on those risks warranting the most attention. At LexisNexis, we've been working on putting together location intelligence solutions, and we have a number of capabilities in this area. We do host contributory databases of both claims history information and policy data for the industry. So that important component of policy and loss information, we already source and provide that information for carriers today. A second component important to location intelligence and strategic visualization is being able to aggregate both the contributory data and the geospatial data, meaning wind, hail, crime, vacancy. All of those data assets must be working together hand in hand with the contributory assets of policy data and claims data, and LexisNexis houses and maintains the data that was presented earlier in this presentation. The next thing that's really important is to take all of that data and turn it into indices, a number from 1 to 5 or 1 to 10 that gauges the intensity of those risks or your exposure. And then to be able to utilize those indices in risk assessment. The final stage in strategic visualization is actually then going to a mapping tool or a UI, a user interface, to actually view and drill down to the visualization of that specific address, as we showed it with the example of classic cleaners. And this assists you in that drill down on those risks that you want to look at from a strategic visualization perspective. At this point, I'll ask if there's any questions, and I'll ask my colleague David Day to provide any answers to questions that have come through the time that we've been going through the presentation. Thank you for your time and attention.
Thanks, Ernie. And really thank you for sharing all those insights and examples. So yes, as you just stated, it's time to respond directly to the questions that our audience has been submitting. And if any member of our audience still has a question that they haven't submitted yet, we would encourage them to go ahead and ask it now. David and Ernie will answer as many of those questions as possible. So let's move ahead to our first question here. Ernie, you referred to risk scores during your presentation. Can you talk a little bit about how these scores are created?
Elliot, this is David. I can respond to that. So we did talk about a number of scores, and how they're created really depends on which score we're talking about. So we talked about a number of natural hazard-related scores, and those can be as straightforward as looking at the historical frequency and severity of a particular peril, such as how frequent has hail occurred in a particular area and at what size. We can also, though, blend in additional data such as claim frequency and severity. So based on the data we have on claim information, we blend that information across a particular geography. It could be at a zip code level, or it could be a census block group level, as an example. We can also use that to predict future risk for a particular peril. So for wind and hail example, we can blend, again, that information, that historical frequency and severity, with claim information, either at that risk or at an industry level, and then blend in property characteristics. So what are the property characteristics of a particular building we're looking at? Ernie also discussed what we talked about in terms of location risk factors, and there we're leveraging much of our public records data. We are the largest provider of public records data. I think our data sources are up to over 13,000 data sources that we absorb and update on at least a monthly basis, and that forms on the underlying basis of the location risk factors that we spoke about.
Yeah, and just another insight on that also, we have, because of the wide array of information at our disposal here, we have created these loss history indices, and we have created the loss location risk factors for every address in the United States. So if you're actually looking at a location outside of your existing book, we have information down to the actual address for those indices, or we call them scores or indices, for all those perils and for the loss history information.
Great. So moving to the next question, how often would the data that the scores are based on, how often would that data be updated?
Elliot, it really depends, again, on the score. So some data is based primarily on government data. So in that case, we're relying on how frequent their data sets are updated. Think of an earthquake risk score as an example, where the hazard maps are updated. Sometimes it's a year or two or more. For other data, in fact, the majority of the scores and data we've talked about today, those can be updated on a monthly, quarterly, or twice a year basis.
And just some other insights on that. When it comes to the loss history information, since we're on an ongoing basis collecting that loss history information, and we're also collecting policy information, that is also updated on that same kind of frequency, which is either monthly or quarterly. So, the loss indices that we talked about are continually being updated as part of ongoing processes here at LexisNexis.
So where does the firmographic data come from? And is there some kind of list of data elements that a user can choose to receive?
Yeah, and to David's point, most of that is through public records information, where we're going out to state and government sources to get that information on, and we most certainly can provide a list of the data sources if there's any particular carrier that we maintain for that firmographic information, but it really is from publicly available information.
Okay. So moving on to the next question, maybe you both could talk a little bit about how a carrier might incorporate this process at the field underwriter level.
Yeah, the way that we've seen it, and there's we see implementation both on the personal lines, on the commercial line side. Many carriers today are coming to a company like LexisNexis and ordering claims history reports, motor vehicle information on a business or on an entity. And those transactions, we can easily append these indices specific to that property location along with their existing order in a system-to-system connection. So that's one way a carrier can get access to this information, which is usually, it requires some coding work on the carrier side. Carriers can also independently develop and work with this kind of data, but there is challenges with bringing together this wide array of information, distilling it, creating indices, and bringing it together. So, but we do believe that if you can distill it down to this 1 to 10, 1 to 5 number, it's something that can be ingested and automated in a relatively short period of time.
Great. So here's the next question. Do you have an API available in order to automate within a policy admin system, or does this have to be done through a website?
We have both, actually. We have an API, a system-to-system connection, where a carrier can send us and address specific information, and then we deliver back indices. We also have a web portal way to access the information, and that's basically because there may be a system-to-system connection can process all of your incoming policies and then identify those risks that you want to visualize, and then we want to provide you the interface where you can also visualize it in a tool like we showed in the example with Classic Cleaners. So we provide actually both delivery mechanisms. David, anything that you wanted to add on that?
No, I mean, a lot of carriers already have existing connections with us, so a lot of the heavy lifting's already been done. So along with XML, there's batch processing, there's an online platform as well.
All right, great. This questioner says, my IT group is swamped. How easy is it to integrate with the LexisNexis system?
Yeah.
I think we kind of just addressed that. You know, we offer multiple options. Again, a lot of carriers already have existing integration to us, so if it's simply adding some new data products or indices, that's adding some, you know, a few additional data elements to that integration and to that stream of data, which typically is not a huge IT effort. And then along with that, we offer a batch processing as well as the online tool.
And, you know, we do find some carriers that want to test the waters will use our online interface and start using the tool to gain benefit and see how it would work into their process, and then move to an automated system-to-system connection after they've been able to work with these indices and information. So you can really test the water through UI first, and then move to a more automated system-to-system connection after you've seen the value that's presented by working through the web interface.
Okay, great. We're going to try to squeeze in a couple of more questions here. First of all, is the data that we're talking about U.S. data only?
That's an interesting question. Actually, the U.S. version that we've developed, back last year, LexisNexis acquired a company in Ireland that was doing this strategic visualization. So the service is actually available in the UK and Ireland. The perils that are important in these other countries are really centered around flood and subsidence and some of the different perils than we look at in the United States. But we do have availability of this service in other countries, and we have developed these similar indices to addresses across the UK and Ireland, you know, we're always open to expanding if there's the demand to countries beyond the two countries that we're in overseas. So yes, we do have the offering, and in fact the capability was first built in those countries, and we've brought it over here to the U.S.
Okay, thank you. Do you build the indices for the 11 perils independently, or do you consider the potential correlation among the perils? How do you go about that?
Yeah, the way that we're presenting the indices is separately, but we have had some carriers that say that they would like to see a composite score. And if you look at the location risk factors, which are vacancy, we do provide a composite there because, you know, the carriers want to look at the individual components, and then they said, well, I'd like to see a roll-up. So, you know, it really kind of depends upon the carrier's need. So we have kind of put some different flavors.
All right, and well, let's see. Another question here. To get cumulative data for a carrier, would they be required to download their policy information?
Yes. So and in fact, many of our carriers today provide their policy information through a product that we call Current Carrier. And so there's a large number of carriers, especially in the personal auto and in the personal property area, that are already giving us their policy in force information. And this product and service and indices actually work with that data they're already contributing to us. From a commercial property perspective, we have a Current Carrier commercial repository where their current carrier, their policy in force data can be contributed to us, and yes, they would need to contribute that data for us to do the calculations on exposure and the whole exposure management aspect of the service. But for many carriers, they're already either providing the data or familiar with providing such policy enforced data to a company like LexisNexis.
All right. Well, thank you, Ernie. Thank you, David, for answering those questions. I think it's been extremely informative. Unfortunately, we are pretty much out of time. I'd like to thank everyone for joining us today for our webcast on evolving how you view commercial property underwriting. We hope everyone found this session valuable, and of course I'd especially like to thank David and Ernie for taking the time and sharing their insights with us today. Also, a special thank you to LexisNexis for sponsoring this event. If anyone missed any part of the presentation, they'll be able to listen to a recorded version within 48 hours on the Insurance Networking News site. My name is Elliot Cass, and on behalf of Insurance Networking News and LexisNexis, thanks for being here with us, and have a great rest of the afternoon.